Hi, Oaks at Jane Lane investors. Thank you for taking the time out of your day to view this investor update. It's really important to us that we have that transparency with you, and so appreciate you taking the time for this update. You can go to the next screen. For the end of August 2025, our asset management update is looking at physical occupancy at 93%. Our economic occupancy is at 74.3%, and collections are at 90. And we're going to touch a little bit about it in the next slide, next couple of slides, but I did want to touch on 74.3% economic occupancy. This is a lot of tenants that we inherited from the previous ownership. And so we are really working on replacing some of the non-payers with just high quality residents. And so we expected a little bit of dip in our economic occupancy as we are evicting. And Andrew will talk a little bit more about that in a bit. So our collections by second week of the month have increased from 60 to 70% to the mid 80s. Really happy about that. And we have also lowered our 1-bedroom and 2-bedroom based on submarket comps. And we are doing a shorter lease for those. So on selected units, lowering that rent, doing a shorter lease. And like I said, we inherited some from previous ownership. We are going to adjust turning these units, just maybe doing like a 9-month lease or a 10-month lease. So that way we can get these leased in the warmer months where it's typically easier to lease some of these units. And so we have a great plan to move forward with that. At $55 a month, we have our new cable and internet package that has been really well received from our residents. So management, Anita is our manager. She is getting the residents into the office and they're signing that contract. And so that's going really well. And it's just a really great program for them. Last month, 79.3% delinquent tenants have been evicted. And I touched on that with the economic occupancy. And so that's just really important to note there.
Thanks, Ellie. So our financial snapshot. So this has changed as per last month. We were well ahead of our budget on NOI. It's dropped a bit, and just kind of some of the items that Ellie was talking about previously, getting some of these delinquent tenants out. So that dropped. So, we had positive variance for a while there, really pushing rents, dropping rents a little bit based on the market comps. And we're going to talk about that in the next slide and kind of what we're seeing in the market. So, just dropping rents to backfill the delinquent tenants and the skips. We're just seeing declining rents. On the expense side, the main driver of kind of the negative expense variance there is real estate taxes. We protested the taxes successfully, which is great. We got the value back to our purchase price because it was appraised above the purchase price. And now we're going through litigation. We're paying for that to push it down even further. Distributions, you should receive your distributions in mid-September. So we paid 1 month, 2 month, and the 3rd month. And we've talked about distribution or depreciation. Really excited about that. Over 100% bonus depreciation that you get in your K1 next year. So the theme here really is we're upgrading our tenants, but we had to lower rents a little bit and add some concessions. So that really just kind of looking at the market. So when we came, one of the first things we came into this property was the rent to income ratio was 2.5, and we raised it to 2.75. And you can see in some of the metrics where collections is getting better as a percent. It's just gotten better over time, really because we're really pushing to get better tenants in. And we had a better screening process. We implemented something, kind of an AI tool that will detect fraud. I think we heard that we got about 2 tenants that were rejected through that AI tool. So we're just kind of, increasing the operations through some of those operational changes. And just the indication here, the collection rate, it's gotten better over time. It was the best the first week in September, almost 90% right going in. So kind of back to that point that Ellie was talking about, property managers done a really good job at making sure that people aren't paying kind of last part of the month, and getting them to pay the beginning of the month. So we went back and we started getting some tenant skips. Some people were self-deporting back to their home country. And we looked at basically those tenants were put in by the previous manager, the previous owner, when the rent to income ratio was a little bit lower. Possibly, we don't know, it's just speculation. They might have been lowering the standards and letting kind of bad tenants in potentially. So that's kind of, what we looked at. The tenants that we're putting in now are kind of much better. This is a kind of another issue that we've discovered, and really just making sure that we're involved in the process and the property management process really, really well. So we'd like to say that, we have third-party management. We kind of outsource the management right now. Some people have in-house management, but we like to say that we do second-party management, and we're really involved in the details. So we had an issue with the last property manager. We were able to pivot really quickly because we're so involved in the process with this second-party management. So the last property manager who left, she sent out renewal notices. We found out kind of after the fact, sent out renewal notices way below our market rents. 5 to 12% below what we expected her to do. And that was giving us a false indication of market rents. We thought our rents were being absorbed, and they weren't. So when we found this out, we drove all the comps immediately, and you can kind of see on the right-hand side, we do a market survey. Every week, we call up our competitive properties, and we kind of share information. We drove those comps. And on that day, kind of ironically, there was another property manager also driving the comps because they saw the same sort of issue that we were starting to see, that market rents were declining. So we exchanged information. They own property called Ladera. So we're kind of going through that process. And our property manager also owns a property that's about 7 minutes away from our property. So that was kind of good data points as well, showing that markets have been declining a little bit. So to Ellie's point, we're reducing rents on the 1-bedroom, the 2 bedrooms, on just 2 units, and we're shortening the lease term. So when those leases renew, it's basically kind of hotter point in the market, so we can kind of push those rents back up.
Awesome. Thank you, Nick. And let me take everything full circle. So when we got the property, right, we had higher occupancy, but we had lower collections. And now that we've got rid of some of those bad apples, right, we've had slightly lower occupancy, but higher collections. And so what we're doing to ensure we carry out our business plan, and the one that we've demonstrated from the beginning, is taking a really microscopic approach to how we manage the property. And I love what Nick said. It's not first party, it's not third party, but we're second party, right? We're really in the weeds. And so it's kind of, I want to speak about 2 things in particular. The first one is lowering our rates, right? Why would we lower our rates? Because we're at the end of leasing season, right? We're going into the off peak. And so we want to really shore up a lot of those vacancies and get them leased out before it gets really cold out here. But in addition to that, on the renewal side, our tenants shop, right? They look at the rates, they look at what we have on the website, and it really gives them an opportunity to push back and say, hey, what's going on? And so what we've done is we've systematically and strategically gone through every single lease renewal one by one over the next 90 to 180 days, right? And we've specifically set the bar in terms of what that renewal rate's going to be for each particular tenant based on specific tenant dynamics, how long they've been there, what unit they have, things of that nature. And so essentially, we have a few of our residents who've been there a long time who are somewhat below our market rents, or where we'd like them to be. But we understand we've also implemented this $55 cable package. Now, while the cable package is a win for anybody, I mean, I'd take it if I could. We have to be cognizant of and sensitive to how much we can actually increase someone's rent. So what we've done is we've maximized our increase to $100. So when you include that $55 cable package, that gets to a maximum increase of $155, which is a little high, but we do understand it is tolerable for our residents. And those who are already above or close to our market rates today, we've capped it at $35 on the increase. And so we've provided this spreadsheet that you see here in the slide to our property manager, and we're going through it one by one. And in any case, if there's pushback, our property manager reaches out to us immediately, and we discuss this live. And so we can go to the next slide, Nick.
Thanks, Andrew. And just to
Of
kind of
course.
circle back, I mean, I think it's super important. We talked about this kind of pre-call. This mistake that was made by the property manager right before she left. This is a mistake that she made, but all these issues we manage, we're the asset management team, the GP team. This all rolls up to us. So it's good that we're in the weeds and we caught it quickly and kind of pivoted to this new plan, getting in the weeds on the renewal. But we take full responsibility and we're working to fix it.
All right, our CapEx project coming to an end. We've been talking about this for the last 3 recordings we've done, and we're really at the home stretch. If not, we're pretty much done. And so all of our lender required repairs are complete, except for the parking spot striping. So initially what we did was we restriped all the fire lanes. After inspection, they submitting all the requirements to get that reimbursement. The initial reimbursement will be roughly $80,000 with the remaining 12 once we complete the parking spot striping. And as far as the CapEx goes, mailboxes are the only outstanding items are on the mailboxes. We're just waiting for the locks to be replaced by the U.S. Post Office. The post office moves at a snail's pace. If anybody works for the post office, I love you guys, but if you can put in a good word for us, please do. We'd like to get these locks changed out as soon as possible. And we finally picked out the stain for some of our natural cedar. That should go up next week. And once the cedar has been stained, we have a few punch list items we wanna make sure get taken care of next week, and we will be completely finished with the CapEx projects.
Yeah, it looks really, really good. Our tenants, existing tenants and new tenants have commented how good the property looks. Thanks, Andrew. So next 90 days, Ellie's coordinating a financial literacy event for our tenants in November. Again, kind of tenant protection and just giving back and educating people, how to manage a checkbook, potentially buy a home. We can continue to monetize the Wi-Fi. We have this check that's in transit right now. It's a door fee, $50,000, and we made good progress so far. 46 of the residents are on the program. Haven't gotten a lot of pushback, which is good. We're going to continue to monitor delinquency and the occupancy. We're in the weeds. Pre-call, we were talking about this is on our watch, this particular property, and Andrew kind of chuckled. He's like, I'm looking at this every single day. So, we had to lower rents, kind of got a minor setback, but we're going to continue to push. The analysts on my team, we have a tool called hellodata.ai, and it gives us market data comps weekly. And I just talked with my analysts today. We're going to implement a process that monitors all of our comps to see where they're moving their rents. There are a lot of owners out there that don't move the rents that much and kind of set it and forget it. There's others that are really active. So we can kind of see what the trend is, and we start to see rents moving up a little bit. We can kind of carry that forward and kind of keep pushing rents upward. That's our goal. And just the last item here, and we mentioned on the last call, but sale comparable makes us feel really good about our buy back in March at 105 a door. This is Woods at Haltham. I know the owner here locally. He sold it 120 a door. I would say I drove this property. At times, the property right next door does not feel that safe. And so this makes us feel good. Our property feels very, very safe. It's quiet. Looks a lot better than this 120 a door property, Woods at Haltham. So feeling really positive about that. So thanks again, guys, for joining us on the monthly update that we do here, and we're very privileged and blessed to have you guys as investors, and we'll keep you updated as we go along. If you have any questions, feel free to reach out to any of us. Thank you, guys.
Thanks, guys.
Thank you all.